Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about RIMAG Group interim report. Jiangxi RIMAG Group Co., Limited, offers a diverse range of businesses and services, including medical imaging examination and diagnostic services, MRI, CT, PET, X-ray, ultrasound, fluoroscopy, cloud storage and cloud film, services radiology information system, and remote/difficult disease consultation, services quality control, and remote hosting services operational management services for medical imaging centers, sales of medical equipment, and consumables development and operation of a medical imaging platform, providing diversified imaging services research and development center for new technologies and innovations. The significant drop in the stock price of companies associated with RIMAG Group, such as Porsche or Volkswagen Group, has caused confusion about the performance of RIMAG Group stock. However, it is essential to note that RIMAG Group is a privately held entity and does not have a publicly traded stock price. Investors can gain indirect exposure to RIMAG Group through investments in Porsche or Volkswagen Group, which are significant shareholders. The publicly traded company, RIMAG Seguros y Reseguros, has shown an increase of 13.61% over the last year, indicating that the query likely pertains to the electric vehicle and technology company, RIMAG Group. Recent leadership changes within RIMAG Group may have contributed to market fluctuations, but these developments do not directly correspond to a public stock price movement for RIMAG Group itself. The company's valuation remains high at over €2 billion following a Series D investment round in June 2022. The primary drivers of revenue growth for a company are multifaceted and varied. Key contributors include an increase in customer base, exponential growth in revenue from empowerment business due to national policy on new medical infrastructure, rapid expansion of customers for imaging center services, and the discovery of value in image data and development of AI-driven business. Additionally, growing demand for imaging examination, driven by an aging population and shifting disease profiles, escalating demand for high-end examination at the grassroots level, support policies for first-of-its-kind equipment, decentralizing resources to expand primary care services, cloud imaging enhancing service value, and data creating derivative revenue are all significant drivers of growth. The company's overseas market expansion, strategic partnerships with medical institutions, mergers and acquisitions, joint ventures, diversified partnership models, launch of new service products for remote operation of radiologic technologists, rapid expansion of asset-light individual empowerment model, strong scale effect from large user base, cross-selling opportunities, optimized cost structure, enhanced service flexibility, and market responsiveness are also contributing factors. On the other hand, primary drivers of revenue decline include year-on-year decrease in imaging center services revenue due to fluctuations in domestic macroeconomic environment and adjustments in healthcare industry reform process. Decrease in one-time revenue from software sales, RIMAG Cloud Services revenue decline in regional collaborative imaging centers, specialized medical consortium imaging centers, operational management imaging centers, and Hanji Health Management, Shanghai Co., Limited, are also significant contributors to revenue decline. The company is indeed generating positive operating cash flow, as evident from the financial summary provided. The net cash generated from operating activities for both 2024 and 2025 are substantial, with figures of RMB 34.1 million and RMB 93 million respectively. This indicates a significant improvement in the company's ability to generate cash from its core operations, which is a positive sign for its financial health. The company's debt level has experienced a slight decrease over the past period. Total debt decreased by 4.1% from RMB 433,214 to RMB 416,347. Additionally, total borrowings also showed a reduction of $14,576 from December 2024 to June 2025. However, interest expenses have increased. Interest paid rose from RMB 11,024 to euro 11,057, while interest expenses on bank and other borrowings saw significant increases from 2381 to 5016 and 4572 to 6775, respectively. These changes indicate that although the company's debt level has decreased slightly, its interest expenses have increased, suggesting a potential shift in financial priorities or obligations. The company's financial performance was marked by several strong segments and regions. Notably, imaging center services, imaging solution services, and individual empowerment products all demonstrated impressive results. These areas of the business contributed positively to the overall financial picture, indicating a successful strategy in these key areas. Unfortunately, there is no data available to assess which segments or regions may have underperformed. Management is optimistic about the company's outlook, citing favorable government policies that promote compliant trading of data products and commercial application of AI-assisted diagnosis. The company plans to capitalize on these policies to drive growth in cloud services, data, and AI-driven business. Key strategies include expanding overseas markets through strategic investments and service-oriented approach, developing high-potential talent through scientific modeling and multidimensional diagnostics, leveraging information technology capabilities to consolidate existing business, and lay the foundation for rapid growth in cloud storage and access services, focusing on developing multimodal imaging algorithms and providing data services management aims to achieve significant growth. With a 1,545.9% increase in profit due to revenue growth, cost reduction, and financial income from investments in data resources and AI, the company is confident that its strategy will drive long-term success and establish it as a leader in the industry. The company's financial summary reveals that it has engaged in share buybacks, indicating a strategy to return value to its shareholders through the repurchase of outstanding shares. This move demonstrates the company's commitment to maximizing shareholder wealth and potentially boosting investor confidence. Concerns over inventory buildup and supply chain disruption. The company's financial summary highlights concerns over inventory buildup or supply chain disruption. A significant increase in raw materials and trading medical equipment inventory of 99.6% from 2024 to 2025 suggests a potential buildup, which could lead to inefficiencies and disruptions in the supply chain. This trend warrants close monitoring to mitigate any potential risks and ensure smooth operations. That concludes the financial summary for RIMAG Group. Feel free to comment below, and I will be happy to answer them when possible.